At last, Wall Street will clear up market sentiment on the final day of the turbulent week. The missing parts in the puzzle are the government data on the labor market, the non-farm payrolls preface, the inflation data which is due next week, and InstaForex analysts will shed light on the dynamics of the benchmark indexes. Let's start. As expected, the stock market was disappointed on Thursday with the major indexes closing in the red. Still, the tension was moderate in anticipation of the official data on the US labor market. The Dow Jones lost 339 points or 1.03%. The Nasdaq suffered the heaviest losses, having closed 1.47% down. The S&P slipped by 1.16% to close at 3,808 points. The key stock indexes traded quietly in the New York pre-market and even gained some ground ahead of the macroeconomic data. Futures on the benchmark stock indexes trade mixed before the opening bell. Following the non-farm payrolls, traders diverted into the optimistic and pessimistic camps. The S&P 500 is expected to trade in the CAD between 3,780 and 3,910 points. The US stock indexes sank on a Thursday because stronger than expected ADP employment data cemented fears about the hawkish Federal Reserve. Another report, namely a weekly update on unemployment claims, showed a decline in the first-time jobless claims last week. The healthy labor market reveals economic strength. However, investors consider the strong labor market to be the reason for elevated interest rates. Clearly, good employment data brings bad news to the stock market. In the context, among the 11 sectors tracked in the S&P 500, the real estate sector tumbled 2.9% yesterday, and the utility sector lost 2.2%. The only sector to close in the green was the energy sector, which rose by 1.99% on Thursday. Tesla shares dropped by 2.9% because car sales from the Chinese production facility had sunk to the lowest level in 5 months. Amazon shares also fell by 2.4% after the company unveiled plans for the layoffs. The stock of Red Bath & Beyond slumped by 30% after the home merchandise retailer signaled gloomy prospects, including bankruptcy. Today, the high-tech sector worsened problems. Tesla shares lost another 7.7% in the pre-market as the company cut prices of the e-cars in China for the second time in 3 months. The company is running the risk of passing the landmark $100 per share. Investors are focused on the official employment report. The fresh data discouraged Wall Street because they confirmed the strong labor market. Still, optimists have found some signs of a cooling down in hiring. The US economy added 223,000 jobs in December. 56,000 jobs fewer than in November. The reading surpassed the consensus of 200,000 jobs, but it's the smallest figure since December 2020. The unemployment rate also went down in the United States, defying expectations. The jobless rate declined to 3.5%, whereas analysts had projected an uptick to 3.7%. Average wages in the US grew 0.3% last month, below the 0.4% growth in November and below the consensus of a flat reading. It's the smallest wage growth in the last 4 months. The labor market is supported by robust consumer spending, so with their tepid wage growth, the market has a faint hope for cooling down in the labor market. This factor might cheer up investors, but the overall picture signals the hawkish Fed. The economic calendar includes the ISM non-manufacturing PMI and the comments by Fed policymakers who will speak on the ground of the red-hot statistics. The US dollar is asserting its strength, supported by the strong labor market. Its index climbed to the highest level in 4 weeks. Now it's trading at around 105.50. Following the data, the index lost earlier gains and retreated to 105. The intraday corridor for the index is seen between 104.60 and 105.30. The US dollar advanced in confidence in the early 2023 in the light of a crucial economic data which have been stronger than expected. The US dollar index was on a track to the weekly gain of 1.9%, the strongest growth since September. Nevertheless, the picture was spoiled by fresh statistics. At the fundamental level, the labor market remains hot and the Federal Reserve is committed to aggressive monetary tightening. Federal Reserve Bank of Kansas City, Esther George, said yesterday that the regulator would make efforts to contract its huge balance sheet and go ahead with the sharp rate hikes for a long time. Federal Reserve Bank of St. Louis President James Bullard said that interest rates are on the way to elevated levels. Today, the market is alert to comments by the other Fed policymakers, Raphael Bostic and Thomas Parkin, and their remarks could also trigger volatility in the US dollar. The Canadian dollar is gaining ground again because the greenback is losing its grip, having shed 0.17%. The USD CAD pair is now trading at 1.3545. The trade in Canada for today is seen between 1.4580 and 1.3590. Canada also reported on its labor market today. The Canadian economy created 104,000 jobs in December, 8,000 more than market expectations. The full employment increased by 84,500 jobs and part-time employment by 19,500 jobs. The data confirms the labor market strength and can assure the Bank of Canada to raise interest rates again. The overnight target rate is now held at 4.25%, the highest level since 2008. There is a 60% chance that the Bank of Canada will increase interest rates by 25 basis points on January 25. The ultimate level is not expected at 4.6% in April. Risk aversion aggravates sentiment in the crypto market. Cryptocurrencies traded lower intraday, though at a slower pace. Before the NONFARM payrolls release, Bitcoin lost 0.7% to trade at 16,730. Altcoins are trading mixed today. Digital assets are vulnerable to the firm US dollar, especially accompanied by bad news. Shattered crypto exchanges are the culprit for the bearish trend in tokens. This time, the bad news came from the court case of Celsius bankruptcy. Thousands of its clients lost their proprietary right for billions of dollars instead in the crypto lender. The US bankruptcy judge ruled that the clients' funds worth $4.2 billion belong the Celsius property. So the firm is entitled to use the funds at its own direction, which is ruling Celsius can sell tokens. And such dismal news undermines the trust in the crypto market and puts a lid on the recovery of the crypto. Hence, Bitcoin is trading under pressure within the range between $16,600 and $16,900. Make prudent trading decisions with InstaForex analysts and have a nice weekend. See you next time on Monday.